on, everybody? You guys know who I am. I'm Jay, DCA Adventure, and we are back again with another video on the Ichimoku cloud. This is not financial advice. Trade at your own risk. And if you guys like our content, please like and subscribe. Hit the bell for notifications. And if you'd like super secret access to our private Discord channel, join our Patreon group. My tier is Trading with the View, and by doing that you also get access to the DCA trading script and any of the new updated scripts that I make. And with that, guys, let's just jump right into this. What's going on, everybody? Alright, today we are going to talk about Ichimoku cloud trading, and I want to try to keep this super basic, as there is a lot of parts to this and there are tons of strategies to use. We're basically going to go over two strategies today. They're pretty simple. I would recommend these for beginners. Trading the Ichimoku cloud it's pretty much got patience, risk management, all the key things you need to be a successful trader in this cloud. And you can totally nerd out on this thing and get into the nitty-gritty of how each thing works. There's tons of lines, there's things on there that you can use, you don't have to use. It's all about personal preference, and how you trade. But the Ichimoku cloud, also known as Ichimoku Kinko Hyo, is a versatile indicator that defines support and resistance, identifies trend direction, gauges momentum, and provides trading signals. Ichi Kinko Hyo translates into one look equilibrium chart. With one look, chartists can identify the trend and look for potential signals within that trend. And sorry guys if you hear my kids yelling and screaming in the background. I am still having troubles with my mic. I have a new one ordered. It'll be a couple days yet before it is here. The main components of the cloud. Now, forgive me if I butcher these. It's been a long time since I've traded the cloud. I did learn it when I first got into trading, so I've had to brush up a little bit on some of the things. So don't hate me too much if I screw up a little bit here and there. Leave in the comments though, where I screwed up, and maybe comment the right thing. But I'm pretty sure I got her down. The Tenkan-sen conversion line. When I talk about this after I show you guys the definitions of everything, I'm just going to refer to them as conversion line, baseline, leading span A, leading span B. I'm not going to say Tenkan-sen, and I'm not going to say Kinjin-sen every time, because I'm butchering the crap out of the name. So your Tenkan-sen conversion line takes the highest high and the lowest low, divides them by 2, and that is for the last 9 periods. So you can consider that a fast moving average. These are not moving averages, but they act like moving averages. So 9 periods is fast. On a daily chart, this line is the midpoint of the 9-day high-low range, which is almost 2 weeks. Pretty close. Kinjin-sen baseline takes the highest high and the highest low and divides them by 2, and plots that for the last 26 periods. So this is a slower moving line. On a daily chart, this is the midpoint of the 26-day high-low range, which is almost 1 month. Senko span A, leading span A, conversion line plus your baseline divided by 2. This is the midpoint between the conversion line and the baseline. The leading span A forms one of the 2 cloud boundaries. It is referred to as leading because it is plotted 26 periods in the future and forms faster cloud boundary. Senko span B, leading span B, 52 period high plus 52 period low divided by 2. On daily chart, line is midpoint on the 52-day high-low range, little less than 3 months. These are the default calculations. I've told you guys before, don't ever change defaults on these unless you know what you're doing. 99% of the people using this indicator are all using default, so you guys kind of want to be looking at the same thing. And I know I missed one that did not have highlighted. The Chico span, it is a lagging span. It's closed plotted 26 days in the past. Default setting is 26 periods. This can be adjusted, and I will show you guys what all of these lines are. The bullish signals you are looking for in the cloud are price moves above the cloud. Cloud turns from red to green. Price moves above baseline momentum. Conversion line moves above baseline momentum. And for the bearish signals, price moves below the cloud. Cloud turns from green to red. Price moves below baseline. Conversion line moves below baseline. Switch over to the chart. And I'm gonna take everything off and we'll just put it on here as I explain what they are, what they do. To get this up on your chart, just go into your indicators, ICH, and it usually pops right up. It's this first one right here. Got some notes here because I do not trade with the cloud that often. Alright, so you notice we got a red and a blue line here. These are your baseline and your conversion line, and you can go right up here into your settings. Your conversion line is blue, your baseline is red, your conversion line is your faster line, your baseline is your slower line. Your conversion line is plotted with 9 period, and the baseline period's at 26. So you can look at it like a moving average. When they cross is where we're looking. In this first strategy I'm going to show you guys, you can, what I do is when you first put this indicator on, it here, I'll just show you, makes everything all real thin and real hard to see, so you can go in and thicken everything up. Now that does look kind of crazy and intimidating, yes I know, but it is super easy once you get the basics and you take off some of the crap that you don't need on there. But you go up, hover over top of your Ichimoku, hit the gear symbol, go to your style, conversion line, I just put it on the third one over here, back over here, baseline, same thing. My lagging span line I like to make yellow, only because there's too much red and blue, it will confuse the crap out of you. And then your lead 1 and your lead 2, I normally don't use them, I take them completely off. But that's how you do it. If you want them on, unclick the arrow. If you want them off, and I guess we can make them thicker as well. And then click OK. So this is the whole cloud here now. I'm going to take off. Just took the whole thing off. I'm going to take off the lagging span and just leave on stuff as we go over it. I did it again. Okay, so if we are looking for longs, you only want to take long positions when these lines are above the cloud. You want your blue line crossing the red line, and you want to be above the cloud. Don't take trades in the cloud. When price is in the cloud, when candles are inside the cloud, um, you will get a bunch of whipsaw candles. Price is indecisive. The signals, the best strategies is when you are either above or below the cloud. And basically it's where it's crossing is what matters. So if we are crossing down here, uh, indicating a bullish uptrend, and we are below the cloud, it's basically that's a weak signal. And same up here. If we are crossing, the blue line is crossing below the red line, and we are above the cloud, that is a weak bearish signal. You want this cross to happen below the cloud to take the short. Same with the long. You want the cross to happen, and you want to be above the cloud in order for it to be a strong signal. Okay, and again, basically these are like moving averages, but they are not. They act like moving averages. They are a little bit more choppier. You can see how they kind of zig and zag a little bit more than a smooth EMA, or you know, the regular MAs that I trade with. When you see that the line kind of flattens out like this here, basically means that we're ranging out or consolidating. So like right here, this is a no trade zone. You would not trade anything right there because we are inside the cloud. Okay, take that off. The cloud and these lines, everything acts as support and resistance in some way. You can find support and resistance using the lines, the cloud, the lagging span. There's all kinds of ways to find your support and resistance. The Chico span, which is the lagging span line, it shows support and resistance kind of well too. I don't use the lagging span as much. It has a lot of noise in there with it, but I will show you guys what happens with the cloud. Your conversion line, and we'll go back up in here to the settings. Your conversion line is your fast line. Okay, this line signals minor support and resistance. Use this for short-term trading. Scalping is a good one to use with that line. Your baseline is your medium-term support and resistance. Price is above medium-term uptrend and vice versa. So if your price is above it, then obviously it's support, and if it's below it, obviously it's resistance. And then your cloud, you have two lines on your cloud. You have your span A and your span B. I don't really use them. I leave them off just because it's just more noise and more cluttered stuff on there. But I will turn them on to show you guys. On your options, it'll be lead 1, lead 2. And basically these will tell you what trend we are in. Okay, so if the green line is on top, then obviously we are in an uptrend. If the red line is on top, then obviously we are in a downtrend. Pretty simple. Pretty simple. And you watch for these crosses too. This is called a Kumo twist. When they cross, and all your other signal lines and everything are matching up, you can get strong and weak signals. Obviously down here we crossed and we had a nice run to the upside. You can use these lines as support and resistance as well. You can see here we were acting as resistance, and down here we are going to act as support. The way that I trade the cloud is I look for the cloud breakout. Okay, so perfect example, and I only trade the cloud on the 1 day. You can trade the cloud on lower time frames, but you need to be a little bit more experienced with it, get used to it. Trading it on the 1 day will help you with patience. Um, it's going to give you basically that cloud is telling you when to trade and when not to trade. Okay, so if you have poor risk management, you're a beginner trader, this strategy is definitely something to learn. Like I said, you can get crazy with it. There's way more to it than what I'm just going to show you guys today. You guys can dig into that yourselves, but I just want to go over the basics, not complicate it. But if we are above the cloud, this is when you want to be looking for longs. If we are below the cloud, this is when we are going to be looking for shorts, okay? And if we are in the cloud, we are not trading at all. We are sitting on our hands. Do not trade if we are in the cloud. Let's turn on the lagging span. Now basically this lagging span is taking the price from 26 periods and it's averaging them. And what you do is you can actually tell, you can go from this candle here, current candle, and move it over, and right there we're at 26 bars, 26 periods. Okay, if that lagging span is in the price like it is right now, don't trade it. If you are longing, you want your price and your candles to be above the cloud, and you want the lagging span line also above the cloud and above the price, and vice versa. If we are shorting, you want your price and your candles to be below the cloud, and you want your lagging span to be under the cloud too. If it's in the cloud or in the candles, it's a no trade zone. Do not trade it. That's the whole point of the cloud, pretty much, in my eyes. It's telling you when and when not to trade. So like right now, we are in the cloud on the daily on Bitcoin. Our lagging span line is in the price in the candles. So this is a no trade zone. You would wait. If we can get back above the cloud and we have the cross, you can see that the blue line is crossing underneath the red line. So I would actually wait until we get into the cloud and we break below the cloud. Once we break below the cloud, I'll be looking to take a short, as long as my lagging span and everything is in the right position. And you can use the lagging span too, like let's find a good example. Yeah, we'll come back to that. But yeah, that's kind of basically what the lagging span is. And your cloud here, your lagging span is 26 periods behind. Your cloud is 26 periods in the future. And it's putting you right in between these two lines. And we can measure that, and I'll show you. We're going to get right there on the lines. We're going to come over and right 26 bars right to the end, 26 periods. Okay, so there's a whole strategy with that too. You can kind of tell that this is telling you where price was 26 periods ago, and we are kind of right in the same area right now. So to me, this is a no trade zone. Okay, now if this lagging span was up here above the candles, then I would kind of be looking and getting ready for a long, because 26 periods ago the price is up here. 26 periods in the future, the price could be back up here. And a good way to find your support and your resistance with the lagging span is you can go just find your peaks. So we got right there is a nice support. We touched a few times over here, and as you can see, it is acting as resistance, and you can go through and do this all the way until you're blue in the face. Another support. Old resistance becomes new support. You guys know that. We've talked about it before. But that's how you find support and resistance with the lagging span line. Let me see. I don't trade with this too often, so I really don't know too much really to talk about other than the crossings, and this is where you want to be looking for. I'm going to take that lagging span line off of there. Try to find a good example of okay, so right here, guys, is a perfect setup. If you guys was trading with the Ichimoku cloud, you could have caught this. Here we have our baseline crossing under the conversion line. Did I get that right? Nope. Your conversion line is crossing under your baseline. When this happens, right there, and we are below the cloud, that would have been a perfect shorting opportunity. And as you can see, your lines were flattened out through here, and we ranged out. We're pretty much in a range. We were consolidating, ready for the next move, and that's basically what that's telling you. Now, vice versa, if you want to take a long, here's a perfect example. We crossed here. We are above price, and boom. You could have rode this all the way up. And this is also how you can figure out where to put your stop. You can put your stop loss right below the blue line. That's going to keep you nice and tight. Or you can use the red line and go a little bit deeper, just right underneath of it. And I like to, depending on what I'm doing, I like to stay pretty tight with my stop losses. I usually don't like to enter a trade at all unless I know it's going to go in my favor. But as you can see, that these lines acted like support all the way up, and you can actually enter your trade here, and if it's a winning trade, let that thing ride all the way until we cross the line and we close. Okay, so you would have entered here, and actually you probably would have exited here because we did cross under the line and we closed, but then we had another crossing here with the two lines, and we were still above the cloud, so you could have taken a long entry again, and then on this candle it came down, it crossed your blue line and closed, so you would have exited. Okay, and you're thinking, well, we missed all this. Well, yes, you guys can't over trade, and you'll want to lock in profits for sure. So by doing this and doing the cloud breakout strategy and letting your winners ride, you got to let them ride. If I trade the cloud, this is how I'm trading it. I'm waiting until we break above or below the cloud, whether I'm longing or shorting, and then I will let it ride all the way until we cross the line. And once we cross the line and close, then I will take my profit. And you could have entered again on this cross, you'd have closed up here, and then this kind of would have been, you probably would have missed out on this a little bit unless you just let it ride. But then as you see here, we have a cross, and now we are going back down. Now these crosses, it crosses to the bearish side. Okay, you get a bearish cross, but we are above the cloud. That's a weak signal. Okay, it doesn't mean go short right there. I don't short anything unless we are below the cloud, and vice versa. I don't long anything unless we are above it, or we break out right at the top of it. So definitely something to keep in mind, guys. You don't want to be trading in the cloud. And trading this on the 1 day is going to help you learn patience. It's going to give you risk management. Profitable traders don't force trades. They don't overtrade. And using this will definitely help you learn patience, because that's what trading is all about, is having patience and risk management. Turn that lagging span on there. And you can see that if you get your measuring tool and you go to the green candle, and right as soon as we touch it, it's 26 periods back. So 26 periods back, our price was right around in this range. So what I will be looking for is a pullback, probably is somewhere up here into your support 9400 area, and then I will be looking to short again. Now if we cross, let's say that this thing keeps riding and it crosses again and it gives us a bullish cross, because we are below the cloud, I'm not taking that bullish cross as a long. That is a weak signal. Can't stress enough, it's all about the placement of the cloud, whether you're above or below the cloud. Definitely lagging span is above price. It suggests a bullish bias, and current prices are higher than previously, and vice versa. When lagging span is near the price, it means that it's in a range. So like over here, we were near the price, we ranged out all the way through there. Same here, we were in a bit of a range, and here, bit of a range. The longer the price stays above the cloud, the stronger the trend will be. Vice versa. The longer the price is below the cloud, the stronger the trend is. So we were below the cloud here, and we had a pretty nice strong move to the downside, and now we are back above it. And remember, guys, on higher time frames, stronger the indicators are. So keep an eye on this right now. We do have the lagging span on the daily in the price, so we probably are going to range out a little bit, but watch for the bullish cross. If we cross again and we can get out, we can close above the cloud, then be looking to long this, okay? But if we keep dumping down into this cloud, sit on your hands until we break below, then be watching for the cross and be getting ready to enter right below the cloud for a short. And see here, lagging span's pretty close to the price, so we are ranged out again. And there's a few guys in our group that they trade with the Ichimoku cloud. I'm sure that they could go over and tell you way more pointers than I am going over with you guys. I don't trade the cloud personally. I learned it when I first started trading. But I do know that it is very effective. It's very accurate. If you trade the Kumo twist like we have here, see how the green is above the red? That does mean we are in an uptrend, and vice versa when it flips down and the red is below the green, or the red is on top of green, we are in a downtrend. See if we can find it. See what a 1 week looks like. this is perfect. You want your lagging span to be above your candles, and that would have been a nice little long there. And see how your conversion line acts as support. And we are getting ready to have a bullish cross on the weekly. I'm not on my paid account. I need to make sure I start getting on the paid account so I could have more history with this type of stuff. I don't recommend trading the cloud on the 1 hour unless you are experienced and you are comfortable trading the cloud. A lot of people would be like, okay, we're gonna long here, but it looks good, but you really can't. The cloud is saying no. We are below the cloud. Price is right around the same area 26 periods ago. And we are in a strong downtrend on the 1 hour. You can see the green is below the red. So don't be longing anything until you see a twist. It's called the Kumo twist. And that's when this green line will cross above the red line. That does happen. I would long, or well, I wouldn't long in this scenario. If it happens and it crosses, you must wait until your price comes back above the cloud. So it'd come up, wait till we break above there, and that's where I would be looking for my entry position. And then I would be putting my stops below the red and green wherever they are at that time. Like I said, guys, you can totally nerd out on this thing and get into the depths of exactly what the calculations are, what it means. You can change them. If you go, see that cloud is putting us right in the middle of these two lines, your conversion and your baseline, and this is what the cloud does. It's 26 periods in front of you. So you can kind of try to calculate and see where the price might be 26 periods in the future. Everything is still telling me short though right here, right now, guys. On the 1 hour, we got the lagging span below the candles and below the cloud. Our green line is on the bottom, our blue line is on the bottom. So as of right now, guys, keep looking for the shorts and scroll up on your higher time frames. If you start to see us in the cloud. Right now, there's going to be no good example of dipping back up into the cloud. Like here, you see that the price came up, and now we are in the cloud. We rejected. That is acting as support, and they are all flattened out. See how them lines are all flattened out on the cloud? It just means that it's choppiness, decisive price action. More experienced traders could definitely scalp the in-betweens, but you guys gotta understand patience. You can't be forcing the trade. Trading Ichimoku on the daily time frame, you may only get to trade 3 to 4 times a month, which is totally fine, because the Ichimoku, it's best for finding the trend. So if you're trading the cloud breakout and you get in the trend on a high time frame like the daily or the weekly, your profits are going to be big. So the 4 times that you do trade, you are going to have huge profits, versus the 100 times that you tried to trade and 75 of them times you lost, and the other you won. So it personal preference. I'm doing this for the new guys. Like I said, I could go into all the calculations for days and days and days about what everything does. But take trades from the cloud breakouts. Don't take trades when the span is inside of price. You want this to be above or below price, your yellow line. Anything above the cloud is bullish. Anything below the cloud is bearish. Okay? Show you this little picture here. You got your Kijinsen line. That's your red one. That's your conversion. Your Tenkan-sen, or your baseline, I'm sorry. Your Tenkan-sen is your conversion, your 9-day period. Faster. Your Kijinsen line or baseline is your slower, your 26 period. Chico span is your lagging span. It is 26 periods in the past. Senko span A is your leading span on that's your green line above the cloud here, your green line on top. It's 26 days ahead. And then your Senko span B is your bottom line on your cloud, and it is also 26 days ahead. And you can see here the Kumo twist. Right down here we twisted and went from red to green. Price is above the cloud. And we did have the cross. So you're saying, Jay, we crossed back here. Why couldn't we have went long here and rode it up and busted up through the cloud? Well, this is because that worked out. It does not always work out like this. Typically, when you have the cross below the cloud, it is a very weak signal, and usually you will get rejected somewheres in the cloud, and you will come back down. We just happen to have enough volume and enough momentum to push through. I typically like to enter the trade right above the cloud as we are breaking out. And as long as everything else is lined up, it's definitely a good strategy for sure. So, on your higher time frame, we are in a no trade zone right now, guys, until we can close above the cloud. We do got our lagging span inside the price, and we do have a bearish cross, which is bearish cross isn't I would say it's medium as in strength. Typically anything above a bearish cross above the cloud and price is weak, so I wouldn't hold too much weight into that. I personally think that we will reject here, and we should go back up and at least test the 94 to 9500 area on Bitcoin. We did have the CME gap at 8500. It looks like it filled, I want to say 86. This is saying we dropped down to 85. So I don't know if technically they're calling that filled or not. I would probably say so. Get in the Discord, talk with some of the guys that trade with this. Astropark, he trades with the cloud all the time. He does have some fantastic scripts that go with this. I'm not the greatest with the Ichimoku cloud as far as explaining it. Them guys could tell you a lot better than I can. Like I said, I don't trade the thing a whole lot. But basically, that's kind of it for the cloud. Watch for the breakouts of the cloud and the Kumo twist. Higher time frames, the stronger it is. So we had a twist down here. And right when we twisted, we started going. Looking like this is going to act as support. And you can kind of see that here with your lagging span. And it may even dip all the way down here. I'll be watching this close. When I do videos on new indicators, I try to trade for a week with that indicator, show you guys what I'm doing with it. So I will trade the daily on here, and we will wait and see what happens. If we can close above this cloud and we can get a bullish cross, then I will be looking for the long. But if not, if we keep dipping down in, I'll be waiting until we break underneath this cloud here And as long as we have the bearish cross with your conversion and baseline here, then that is a pretty valid, strong signal to take a short. Basically, use the cloud as a beacon. The cloud tells you when to trade and when not to trade. Okay, so if you're trying to trade in the cloud, you are going to get a lot of noise, whipsaw action, but it is possible to profit trading in the cloud. Once you get more experienced with the cloud and you got your strategy down pat, then yes, you can take trades into the cloud. Let's take the cloud off of there, and we'll chart a little bit of stuff and see what is going on, where we got some good buys and good sells, because everything has dropped here the past day or so. So it is probably going to be looking like time to buy some stuff. All right, let's take a look at Ethereum. Looks like we got some pretty good support down at the $193 area. This is an indecisive candle, so we'll see what happens here. We kind of need to close back up here in order to keep on moving. Just to see what it looks like. It still looks good. We still have the green line above the red line, so we still are in an uptrend. We are still above the cloud. Our lagging span is in a perfect position on Ethereum. We are not in the price, and we are still above the cloud. So right here at the Kumo twist, see how we twisted here? It was red on top, green on bottom, twist, and now we're green on top, red on bottom. That would have been a buy point. Because price was up here above the cloud, and the cloud was actually acting as support right there. So this would have been a perfect long entry. This is how you want the setups to look. And same when you're trying to short, you want the same type of thing. It's so hard to decipher with all these lines. That's why I go in to the settings and I take off lead 1, lead 2, and I make everything a bit bigger. See how much better that is now? And you can even take off your lagging span. I don't really use it that often. Basically just watching your clouds, and I trade the breaks and I trade the twists. So for example here, we did come down, we hit the cloud, we did have the crossover here, but I wouldn't have entered that trade until we broke below the cloud. Somewhere's around in here, you would have got in at 230 and you would have stayed all the way until 115. That would have been huge. Or if you do it how I do it and wait till we cross the line and actually close above it, is usually where I will take profit, because typically when that happens, we do change trend and we go to the upside. And that's basically what these lines are telling you. They're telling you the trend of the market. The cloud is telling you the momentum. And then they all tell you support and resistance. So it does look crazy and confusing, and there are tons and tons of strategies to do this. Two basic, guys: just trade when we break above or below the cloud and trade the Kumo twist is basically what I got for you on the cloud. And get that off of there, and we'll just look at smaller time frames and see what we could do here on the hour for some scalping. Okay, so we do got the pretty typical pattern that plays out a lot in Bitcoin as well. You get 1, 2, 3 humps, and on the third hump it usually will dump. Kind of looks like a head and shoulders. I guess you can consider that a head and shoulders pattern right there. We are testing support. It doesn't look like it's a very strong support, or we did test support. It looks like we got rejected. That didn't look like it was very strong, so keep an eye on it. There was a gap from here to here on the CME, and it's definitely filled it. So what do we got there? 192. Yeah, we could come back down and test the 216 area, and then the next spot from there would be the 190 area. So be paying attention for that, guys. Let's see. Look at XRP 2. $1. Every time. One-hour chart. We did test support. Looks like we bounced a little bit. Yeah, we got pretty strong support all the way through, so I don't see it dipping back below 22 cents. Just depends, guys. Do got doji candles on there. That's on your hour. Flip up to the day. See what the day's telling us. Everything's gonna look shitty on the day right now, guys, because we just dumped huge. Typical head and shoulder pattern here. Boom, boom, boom. I'll show you a quick way to measure your head and shoulders patterns and kind of get an indication of how big the dump will be. Now, if this was inverse and this head and shoulders pattern was upside down, you could do the same measurement to see how far this thing will pump back up. But it's just going to be, this is how I measure these out. Okay, so you got your left shoulder, you got your head, and you got your right shoulder. Pretend that none of this is even here yet. Find your neckline, which is right, wrong line. Find your neckline, which is where the tops of the two shoulders are. Okay? And what you will do is take a trend line, and you'll get right on top of your neckline, and you'll measure to the top of the head. You can add wicks, you cannot add wicks, and just go to the body, however you like to do it. Then you take that line, and you put it right there at the bottom of the neckline, and look at that. I mean, damn near perfect. Gives you a guesstimation on where price will head to. Also, look at your very next step of support, and that will be another indication too of where it's going to go. But you can do this measurement with any head and shoulders, inverse or regular, to see where the price will dump or pump. But yeah, it looks like we got decent support down at the 22-23 cent mark. So I wouldn't expect XRP to head down any lower than that. No, my buddies, they mine the crap out of beams. So let's have a look at it. And we did have a head and shoulders on the daily. and we got a ton of strong support down at the 5 cent area. We did test it too, 5.3. I don't think it'll go any lower than this, guys. This does look like bottom here, so who knows? Who knows? I look at this right now as a good time to buy. You know, I really like Stellar Lumens for some reason. I don't know why. I think it's mainly because they're super fast and the transaction speeds are like nothing. I think it costs 1 XLM to send 1 million of them. So yeah, we did test some support here down at the 5 cent, and our bottom area is right around 0.04. So yeah, I would expect this possibly to go a little bit lower. Or nah, maybe not. We got pretty good support there, but right around 4 cents is your bottom. So even this is a good buy too. Looks like all these altcoins did show that head and shoulder pattern. Check out Tesla. I know this is crypto, but Tesla has been on a crazy tear here lately. It topped out at $967. Wow. I'd be looking for a very sharp correction on this thing, guys. I mean, hell, we bottomed for a long time. We ranged out for months and months and months. Yeah, for years, actually. I mean, hell, from 2013 to current, we ranged out all the way. You know, that's a lot of years. I would look for a pullback to the 392 area. I mean, you might get some swiggles here and there, but I would think that we would pull back. Tesla, that'd be a huge short, guys. It just depends on Tesla's news. You know, stock markets work different than crypto per se. Bitcoin doesn't normally move on news all that much. Sometimes it does, sometimes it doesn't. And that's the beauty of the cryptocurrency exchange. It doesn't act like regular assets. Okay, what else do we got? Take a look at Litecoin. $57. We bottom for Litecoin is right around the 22 area. I would probably buy this for a small little scalp. Now remember, guys, we got the halvening coming. We talked in the last video about how I think the halvening has been priced in, and how we may have a small little spike the day of, and that is because all of us have been in the space for a few years now, have known about the halvening. We've been waiting for the halvening. We bought all of our Bitcoin back at $3,000, so you know, the only thing that I see is new people FOMOing, and the price will increase maybe a tad bit, but for the most part, I think we're going to range, and I think we'll probably slump down a little bit more, consolidate, and I think it will be a few months after the halvening before it actually takes off, but hopefully I am wrong, and we get to the moon sooner rather than later. Alright guys, that's pretty much all I got. I've been super sick the last few days. I probably could have done a little bit better with the explanation of the Ichimoku, but get in my Discord, Crypto Mentors Discord. Link will be in the description below. Get in there, check out Astro Park. There's a couple other guys in there trading with the cloud. They can give you a lot more. I just did this because I was asked to. I personally don't trade with it, so I'm not the best as in terms of explaining exactly how to use it. Also, get into that Patreon. $25 a month, guys, and you're getting that script. It is well worth it. There's other guys out there that's got a similar version of it, and they are charging $1,000. So get in there, get that script, get with me or get with Astro, and we will go over and help you use it. We do have a video on it. I do need to make an updated one as we have updated things within the script. But with that, guys, I hope everybody has a good night, and I will see you again next Wednesday, I think. Yeah, next Wednesday. Alright, guys, have a good night.